Hello and welcome to Money Minutes, your quick guide to making money. I'm Kayezad Adajania. There are several ways to invest in a mutual fund. One of the most popular ways to invest in a mutual fund is through your distributor. So let's take a look at what kind of different distributors are there out there in the market. The basic requirement to become a mutual fund distributor is that a distributor needs to have a minimum basic qualification, which is to pass a test given out by NISM, National Institute of Securities Markets, and the distributor has to be KYD compliant. KYD meaning know your distributor compliant. Now, these are a certain set of documentary norms that have been prescribed by the mutual fund industry for the distributors to be registered with it. So once the distributors meet these minimum requirements, they can then go on to sell financial products like mutual funds. So there are basically three types of mutual fund distributors. The first type is the plain vanilla mutual fund agent. Now this is the most basic type of mutual fund distributor available out there in the market. This type of distributor does not charge any fees. He's just interested in pushing the forms. He's a mere seller of financial products, of mutual fund schemes. As per rough estimates, there are about 53,000 distributors out there in the industry, out of which some will charge fees and some will not charge fees and merely sell products. Distributors, plain vanilla mutual fund distributor agents, are those who will just sell the products. They will not charge you any fees. So basically, when you invest through these kind of distributors, you need to know what kind of mutual fund schemes you want to invest in, because you should not expect much advice from these kind of distributors. And even if this distributor gives you any advice, it will be incidental. The second kind of mutual fund distributor out there is a financial planner. Now, unlike a distributor who I told you does not charge you any fees and who is only a transaction oriented person, a financial planner is actually an advisor. So what he does is that he will sit with you, he will make a holistic financial plan for you. He will take into consideration your expenses, your income, what are your financial goals, and then make a comprehensive financial plan for you. After he makes the financial plan, he also regularly monitors your financial plan and your savings and investment habits to ensure that you are on track to reach your financial goals. Now, a financial planner, to do all this, he will obviously charge you a certain set of fees. Now, there are very rough estimates as to the number of financial planners out there in the market, but the estimates that we have is that there are only about 15 to 20 fee-only financial planners out there in the market, meaning to say that only about 15 to 20 people out there in the country make a financial plan for you. They do not help you invest. They just make a financial plan, and then based on the recommendations that they give you, you will then need to invest on your own. Another about 100 to 200 financial planners out there, they charge you fees, and they also help you invest in a product. So this is what a financial planner actually does. Now, we've already discussed distributors. We've discussed financial planners. Now, in normal mutual funds parlance, the distributors and the financial planners together make up a category called as IFAs. That is the independent financial planners, independent financial advisors, I beg your pardon. Now, as per estimates given to us by AMFI, which is the mutual funds trade body, there are about 53 distributors, qualified distributors out there in the market, out of which about 48,000 or 45,000 to 48,000 are IFAs. Out of this, only about 10,000 to 12,000 are actually active distributors of financial products. The third kind of distributor out there are banks. Now, banks, most of the banks do not charge you any fees to give you financial advice. Some do, but most of them are merely sellers of financial products, where they will give you forms. You need to tell them which funds you need to invest in. They will give you forms, they provide you forms, and you invest through them. Most banks do not charge any fees from you. They charge fees to the mutual funds, and they earn their fees through trail commissions. There are some banks, for example, like HSBC Bank, who also have a separate wealth advisory and financial planning division, which does a holistic financial plan for you, and they charge for you for the plan. The last kind of mutual fund distributor out there in the market are called as Sebi-registered investment advisors. Now, this is the latest breed of distributors to be out there in the markets today, thanks to the recently formed, Sebi Investment Advisor Regulations 2013. Now, when these regulations came out, distributors were required to pass an additional qualification examination and adhere to the various requirements which were laid down by these guidelines. For example, the distribution business and the advisory business of these Sebi-registered investment advisors have to be completely separate. They have to charge fees only from the customer. They cannot charge fees from the mutual fund, that is the product manufacturer. Their records have to be audited once in a year, and they have to preserve their all their communication, all their whatever their phone records that they have with you, the customer, or the email records have to be saved for at least 5 years. So these are the different types of distributors out there in the market today. We hope you enjoyed our session today. Keep watching livemint.com for more.